I'd love to have time to stop and film this, but the truth is we haven't. We've got to go to the gym because I'm not keep calm and carry on. That is the message, and therefore I've just got to think where the car is. Hold on, where's the car? This way. So if I'm going to keep calm and carry on, it means I'm not missing the gym membership because President Trump has seen fit to send the markets into turmoil. I think it's really important that we all understand that markets are doing what markets do, and we don't need to panic.
Sam, how much should I believe the news stories are forecasting economic trouble?
Well, the news is absolutely chock-a-block full of them at the moment, isn't it? But I think the truth is that good news doesn't really hack it, so they only want to tell us when markets are crashing, so we get all of this talk about the drama, and it's really hard for us to stay calm because the truth is that we have like this recency bias. We can't help it as human beings, but you know, when we hear stuff on the news, it's then in our heads, and because we've heard it recently, we think that there's drama in the stock markets. Actually, the stock markets are just doing what the stock markets do, which is 25% of the time they're correcting, they're receding, and 75% of the time, which is the good news bit that you never hear in the news, they're going up. They're advancing. So the point is that this short-term sensational news is short-term, and it's not the main event. The main event is that markets go up. So please don't let the news cycle with its drama give you the impression that there's anything wrong with your investment portfolios, because that simply isn't true. And there's over 100 years of empirical data to support the fact that the short-term blips in the market going down are completely outweighed by the much longer term and sustained increases that we get from being invested in the market. I know I sound like a broken record, but please, please, please keep calm and carry on.
Sam, has the economic landscape changed fundamentally this time?
I don't think so, to be honest. I know that the news would like to sell us a story that it's never going to be the same again. But to be honest, you know, you've only got to look back at history to the Boston Tea Party, which is when we were putting tariffs, the Brits were putting tariffs on teas, and the Americans got so fed up with us that they dumped all our tea off the ships into the Boston Harbour. So tariffs aren't new, and trade wars aren't new. I am a little bit surprised that the Trump administration has chosen this arena, because the data tells us it doesn't work. It creates inflation. The inflation comes, hold on a minute, a lot of traffic here. The inflation comes from the fact that if you restrict trade, prices go up. Tariffs restrict trade. If you make it more expensive for American people to buy imports, then the American market will put their prices up because they can, because the imports aren't making them compete anymore. So tariffs don't work, they put prices up, that amounts to inflation, and it makes the local manufacturers lazy. They don't have to work on processes, get better, produce cheaper goods, because there's no competition. So it doesn't work, and history has proven that over and over again in the past. I'm a fan of free markets, and global capitalism is what we need, free market trading, and that's what works best. The reason Trump has chosen this arena is because he likes to negotiate. He is a negotiator, he's a deal maker. And what he's created now is an environment where instead of him going to other nations and saying, please will you make America great again, help me keep my promise to the voters, he's now got us all knocking on his door, phoning him up and begging for a deal, which is where he's comfortable. That short term, he's created an environment he likes. He's only got 4 years. The rest of us have got to live with a decade of inflation, and America will have to recover from like the damage done to its manufacturing industry by lazy practices and short-term profiteering. So it won't work. That's my opinion. The Trump administration can phone me anytime and make a deal with me for my advice when they're ready.
Sam, how do I know investments will grow in this environment?
Because there's nothing new here. You know, we've been in trade wars before, and guess what happened? The market went up. And we're probably looking at trade wars again, but guess what will happen? The market will work it out. Markets do what markets do. They learn to exploit the current economic environment and make money out of it. And they do that long term, regardless of the economic backdrop. There is no evidence in 100 years worth of capitalist data that says that the markets won't work it out and work out how to profit from it. So, if you have a globally diversified portfolio, then you've got nothing to worry about. Let the market do what the market does, which is work out how to make money regardless of what's going on out there.
Sam, how are President Trump's trade tariffs going to impact my portfolio?
Well, it kind of depends what you're invested in, but to be honest, it's hard to imagine when America represents 60% of global capitalism that any portfolio is going to survive without some impact. But markets will work out how to make money out of the current situation. So as long as you stay diversified, don't try and pick the winners at this stage, because you don't know who they'll be. Nobody does. The market will do its due, and it will sort out the strong from the weak and the good from the bad, and some will rise and some will fail. The way you stay safe is not to try and pick the winners. Stay invested, diversified across the market, across the geography, across the sectors, and you'll be fine, because that's the way you manage risk. Don't try and pick the winners and bet solely on the winners, because if you pick wrong, you'll lose. If you stay diversified, what you know is that you will be dragging some things along in your portfolio that aren't benefiting from the current economic climate, but you will also be exposed to the things that are going to be able to benefit. So just stay diversified. Stick with a global diversification. Don't try and pick sectors or trade blocks or anything at this stage. Keep it simple, keep it well diversified. Don't try and pick winners.
Sam, how can I make sure my investments don't lose money?
Well, I think the easiest way to lose money, to be honest, is to panic and start trying to time markets and guess what the future is going to hold in the way of winners. So, just charging the car here. So do you want to come this way? We're off to the gym now. Yeah, you can't guarantee that the stock market is going to go up any particular time. What you can do is be sure from 100 years worth of empirical data that if you stay invested for like 20 years, then you'll make a real return above inflation. And to be honest, if you're talking about your pension pot or the investments you're going to use later in your life when you stop working, or to fund the future kids' education or a house, or whatever it is, if it's a decade or so away, what you can't do is leave money in the bank, because it will go backwards against inflation. So you have to learn to invest. And part of being an investor is accepting that 25% of the time the markets will be falling. The good news is that 75% of the time they're going up. And guess what that means? Net plus results. So just stay invested, don't panic, keep calm, carry on.
Sam, why can't I just leave my money in the bank where it's safer?
Because bank interest rates, the saving into cash, has no mechanism for outperforming inflation. So inflation is the amount that prices go up each year, and the truth is that prices over any significant period of time, let's say 5 years or more, will go up faster than your savings will grow by the interest rate that's being added. And there's no way around it. There's no period, if you look at history, where this interest rate on savings outperforms inflation. It just doesn't happen. So you end up going backwards if you leave money in the bank for 5 years or more. The bank is the right place to put the money if you're going to spend it within 5 years. In fact, don't put it in the stock market if you're going to spend it within 5 years, because it might go down and not have time to recover.
Sam, how do I choose an investment that's right for me?
It depends how long it's going to be invested for. So it depends when you want it to show up again in the future, and it depends what purpose it has. So it's a very different type of investment that you want back if you're going to use it, say, to replace your income in retirement. So you want regular slices of monthly income from 20 years to 80 years time. Or do you need a big lump sum to knock over your mortgage on a specific date when you're contractually bound to repay it? So the first thing you have to do is work out, what do you want the money for in the future? Often we can't be all that specific. We just don't know, we don't need it at the moment, and we just want it to show up in a decade or so's time, worth more, buying more than it would if we spent it today. So if you're choosing that type of investment, then you're looking for long-term real returns above inflation. You want to keep it as simple as possible. So you want to choose something that's globally diversified, probably passive, tracking markets rather than trying to choose which markets and which stocks do best. So it's cheap, it's well diversified, globally spread, and you can wrap it in things like ISAs and pensions to make sure you're getting the best tax deal. My advice, I'm an independent financial advisor, chartered financial planner, and I'm going to say get advice. And to be honest, you know, you shouldn't, money's too important for a kind of have a go mentality. Work with a professional, work out your strategy, get some investment tips on what you should be doing over what period of time, and get involved with somebody who can choose investments that suit you, not somebody who's representing a company who can only recommend their products. So get an independent financial advisor, do a financial plan, set your strategy up. You know, a good financial planner can add tens of thousands, if not hundreds of thousands, to your wealth over your lifetime. And I'm not talking about rich people, I'm talking about everyday people earning a living through their life. If they get the tax right, if they get the investment right, if they get the plan right, it adds thousands, tens of thousands, even hundreds of thousands. So please don't just have a go, get some help.